QE2 is not an opportunity for investment. It's an opportunity for the US Federal Reserve to make a lot of money. See, they borrow at 0.5% or 1% by issuing short-term and 1-year and 2-year bonds, and then they take that and reinvest it into 10-year bonds, which yields 3%. So they're making the money. There's another misconception. QE2 does not mean that money comes into Asia. No money comes into Asia. So if anyone wants to buy shares because they think QE2 is suddenly going to bring in this huge wall of money, then they're wrong. One reason is because it's not hot. that's the first reason. But it's the second largest hand tool manufacturer in the world behind Black & Decker. It has a market cap of about it had a market cap of about 1.6 billion. It's got sales roughly of 3.5 billion. So it's trading at less than half price to sales. Now, 2-3 years ago, this company expanded quite heavily and suffered due to the 2007-9 recession, as well as they had to take certain write-offs from the companies that they actually bought. Their business, their overall business hasn't done badly. They just had to take a few additional costs out, and therefore they had to raise funds. They had to make sure that their debt to equity levels were reasonable, and they are back to square one. They're doing well now. They're cutting inventory. They're cutting their debtors. Debtors to sales is doing well, reducing. And this is a good company. This is a great franchise, and it's being sold in the market at very, very cheap prices. This used to be $20, Hong Kong. It went down to $1, and it's now about $9. And I can only see good things happening. 75% of sales is to the US, 25% to Europe. So there's a little bit of a play on outside of, in the West. And I don't particularly like the West. But this is a fantastic company, and it's got very, very good products. So I like it. I think it's cheap. Well, I selected Hong Kong Exchange because it's the stock to own in the Hong Kong market. If there was only one stock you had to buy, it's this company. It's responsible for listing shares. It's responsible for the market turnover. It sells research. It uses funds for settlement funds and earns interest on those funds. It is a complete and utter monopoly. It distributes over 90% of its income. It's already spent heavily on increasing its capacity 10 times to what it needs. It's all free cash flow, and you don't need to be a genius to run the company. You just need to wear a suit, a tie, and have a good smile and a good PR, and that's it. It's a great company. Many companies want to list here from overseas, in China. It's a great company. It's got a great future. Well, 2010 has been a difficult year. It really hasn't been very bullish. Most people are bearish. There's lots of money on the sidelines. China has been a disaster. It's very close to its low since the 2007 or 2009 crash. It's about 70% lower than its high. Everyone's bearish on Chinese property. They believe there's a bubble, a banking bubble. They believe the yuan is too strong. So there's every reason to think that things are going to be not so easy in 2011. The Chinese authorities are taking certain monetary moves, monetary steps, raising rates, as well as raising bank reserve requirements. And this is all well and good. But they need to do something on the fiscal side. There's profligate spending by some of their companies that they manage. There is a lot of buying of commodities, stockpiling of commodities, creating bubbles in that market. And I think they ought to do a combination. I would imagine 2011 won't be easy, but it'll be better returns than 2010. Well, 2010 wasn't good, I said that before, but so 2011 hopefully should be better. Any good stock? I mean, you know, maybe we should go back to basics and look at some of the old Hang Seng Index constituent stocks. There's many of them, and many of them have been forgotten. You know, one particularly good one could be Hutchison if their 3G business decided to turn around. But there are other good companies. There's Taichung, there's decent company, hasn't done much for 25 years, but that's deeply undervalued. And there's the consumer stocks in China that will continue to do well, and that's banks, properties, things that other people hate. These are the things I like. Right, lots of people ask about investment philosophies, and different people have different ways. My philosophy is very simple. I'd like to buy companies with predictable earnings, those that you can sort of guarantee that'll earn money year after year after year, hopefully growing. And I like to have companies that can also display some sort of a competitive advantage. Durable competitive advantage which just won't erode over time. So I look at the cash flows of companies, annual cash flows, free cash flows, and if they are large and you don't need to spend a lot on research and development, there's lots left over to pay dividends, so shareholders are remunerated as well. And I don't want to buy and sell, I want to hold forever. I don't like to trade. I don't like to listen to about factors and other things that I have no control over. I just want to buy great companies and hold them, because far better than cash.